Hey everyone, welcome back to your weekly market outlook. This is for the 22nd of April 2024. Obviously, this is going to be the last full trading week in the month of April. Let's just jump in quickly on to last week. I think in terms of data, there's not a lot going on in terms of data coming up from last week. Obviously, we have that good retail sales number from the US, and then industrial production in China kind of dipped down a little bit, pushing oil prices down. Overall, if we take a look at last week's data, the focus would definitely be on the UK numbers. The UK inflation numbers, it is higher than consensus, but it was lower than the previous month. We are looking at a drop from 3.4% to 3.2%. It is still higher than consensus of 3.1%, but I think the nail there for sterling was definitely on the retail sales number. Retail sales number kind of missed expectation. Previous number was actually revised as well. So we have the number from 0.1% growth per month to 0% growth, and that's pretty damaging considering the consensus is for an increase to 0.3% growth for last month. And that's basically it in terms of data from last week. I know there's a lot of volatility that goes on in the market for various reasons. Number one is obviously the US dollar being so strong. It kind of pressures pretty much every currency in the world, especially the Asian market. There's a lot of concern in terms of the stronger US dollar and the Asian currencies. It kind of reminds a lot of people of the beginning of the Asian financial crisis in 1997, 1998. So that's something that we kind of need to keep in mind as well as we tread through 2024 in terms of whether or not it would actually have a very similar impact. Tensions in the Middle East rising up again as well, obviously, and that's a good thing that we didn't see anything boils to anything much. But again, that's going to be the focus for last week as well. A lot of tension there, and the consideration for the stronger US dollar. And as we have comments coming out from federal members saying that, we're probably going to keep interest rates higher for longer, kind of dashing up any hopes for early rate cuts in 2024. Again, I think there was a lot of adjustments last week. That's basically what happens in the market. All right, so for this week, a couple of things to focus on. Obviously, the inflation number in Australia is something to focus on. Inflation number from Australia is expected to drop from 4.1% to 3.4%. And then we have the GDP growth rate coming up from the US. And if we take a look at the GDP growth rate here, we are looking at a very significant drop. The consensus is for 2.5%. But if you take a look at the forecast, it's all the way down to 2.3%. So we might get 0.9% all the way up to 1.1% drop on the GDP growth in the US for the quarter. Now, PCE numbers is expected to come out as well, and for the PCE numbers, the index itself is expected to remain stable. But if we take a look at the income and spending, we might see a little bit of a shift here. We are expecting a higher income for the US citizens there. Obviously, the spending is expected to drop down a little bit. So we'll see what happens here. Again, market is kind of still there on the edge there for, should the PCE numbers becomes, above expectation, should the PCE number increases, that would just add more confirmation that the FOMC is probably not going to do anything much, and that could again push the US dollar stronger. So that's something to watch out for this week. All right, let's just jump in onto the Aussie USD. For the Aussie USD, we saw the Aussie USD weakens a lot faster than the Euro USD and the Pound USD. They're not faster, but it kind of weakens earlier, right? So we saw that drop on the Aussie USD. I know it's not much per se in terms of range, and it's still contained within a 200 pip range. It's not really that significant. But last week, what we saw was that price was building up strong support at 64 cents. And the movement last week, we saw that spike down on the Aussie USD on pretty much on Friday, managed to just maintain a position above 64 cents. It does indicate there was some buying on the Aussie USD at around 64 cents. In terms of the momentum, the RSI has kind of climbed up above 40 at this point in time. Does indicate that we might actually see a little bit of a recovery on the Aussie USD. It is considered to be safe in a range bound market condition, but this recovery, we're expecting a push towards 65 cents. Whether or not it can actually break above 65 cents, it's kind of irrelevant at this point in time, because if it does correct itself all the way up to about 65 cents, that would actually be kind of limiting itself at about the Ichimoku cloud. So we do have a couple of immediate resistance for the Aussie USD, which is at 64.50 and then at 65 cents, and then the Ichimoku cloud would come in at about 65.50. So those are going to be your resistance levels for the Aussie USD. It doesn't change the fact that this is still technically pressured lower, but we do expect a little bit of a short-term recovery to happen on the Aussie USD here. Now for the Euro USD, we have to note here, we have broken significant support levels, right? So we have broken 1.07, 1.0650, and then last week what we saw was market attempting to recover and try to claim this previous support area, right? Right now it is currently being tested as a resistance, and price is still hovering around that 1.0650, 1.07. Couple of things to note here. If it does break 1.07, we might see a little bit of a stronger recovery towards 1.0750, where the resistance 2 is waiting, and also where the resistance trend line is actually waiting. Beyond that, we have 1.08. Obviously, that was the previous critical support level, which is also the sell side liquidity on the Euro USD. That level needs to be tested again. So for now, we're not expecting a run up towards 1.09 anytime soon. We're still waiting to see whether or not the Euro USD can actually reclaim 1.07. If it fails to reclaim 1.07, then we expect a lot more sellers to look at that opportunity as, you know, more of a selling opportunity on the Euro USD. With the pound USD, this one here is really being pressured lower because of that data that came out from the UK side, especially the retail sales number. So we saw that push down on the pound USD, and late Friday we saw another push down on the pound USD. Obviously, it has cleared a lot of significant support level as well. It's ever since it breaks that order block up below 1.25, it's pretty much a one directional movement for the pound USD. We saw that pressure last week, and it continues to do so. It is approaching 1.23, 1.2350. This was the level that we talk about in terms of where the pound USD could actually head to. Very close to that level, and we're not seeing the momentum starting to recover as of yet. So we're looking at this right now, where we have the weekly pivot pretty much at 1.24, and then resistance 1 pretty much at 1.2450. These two are going to be your immediate resistance for the pound USD. Any failures at this level, we are expecting further push lower towards 1.23. The other scenario is that we don't see that recovery and we continue to push towards 1.23. If we do see that push towards 1.23 first, then we expect more profit taking to happen at 1.23, and might see a little bit of a short bounce around 1.23. I don't expect the 1.23 and 1.2350 level to be broken easily for the pound USD, so take note of this and expect this to be a stronger support for the pound USD. All right, moving on would be the Dow Japanese yen. Obviously, the Dow Japanese yen, we've got comments coming out from Ueda as well this Monday morning, saying that they will reduce their JGB bonds purchases regardless of economic data. So that's a move towards tightening, right? It doesn't help with the yen as of Monday as well, because that comment is going to just get brushed off by the market. However, the data that we need to look out for is actually this week. There's actually a monetary policy decision by the Bank of Japan this week, and that's going to be the main focus for a lot of traders, right? Any comments coming out right now is kind of irrelevant because they want to have that official comments coming out during the monetary policy report this week, which is going to be let me just check very quickly, which is going to be on Friday the 26th, right? So we are expecting that comments to come out from the Bank of Japan. And between now to Friday, if we take a look at it from a technical perspective, this is currently forming an ascending triangle, and the pressure is still pretty much there in terms of demand for the dollar Japanese yen. Every time it dips, people are just buying back the dollar Japanese yen. We saw that pressure here, and right now for dollar Japanese yen, obviously this is starting to approach 155, and if we have that ascending triangle pretty much around 155, there's a high possibility there's actually a lot of orders line up at 155, so if it does breach 155, we might actually see a very quick sharp spike to the upside before it kind of retreats immediately as well. So with the dollar Japanese yen, I don't think this is a great place to start buying the dollar Japanese yen. It's pretty much at the tail end. Unless you have a dollar yen position that you need to maintain, just be very careful with the 155, because that 155 level is pretty much the line on the sand in terms of where and when the Bank of Japan is actually going to intervene into the market. Okay, so just keep that in mind with the dollar Japanese yen. We're not seeing any weakness as of yet, but again, things can change very, very quickly if the intervention happens. And obviously last week we have that talk in the G20 meeting, G7 meeting between the US, Korea, and Japan, that they have sounded concern for their currencies, and that the US are going to be monitoring this very closely with them as well. So whether or not there's actually going to be a trilateral intervention, that's to be seen. But for now, if the Japanese government wants to intervene, they could actually call up the Korean counterpart and say, like, hey, do we want to do this together? If we do this together, we might actually have a little bit of a chance to pressure the US dollar. So just keep that in mind. Those are something that's going to be a little bit more unpredictable for the yen pairs this week. All right, so moving on, we have gold. So for gold, if you take a look at the formation for gold here, this is currently forming a symmetrical triangle. It's kind of halfway between whether we should consider this to be a pennant, but I would consider this to be more of a symmetrical triangle rather than a pennant, because we have, lose a little bit of a steam here on gold. The momentum is kind of pushing down lower at this point in time, so that could actually be a high probability that market is looking at really overbought gold market condition at this point in time. The support that we have is 2,350. If we do close below 2,350, then we expect that push lower towards 2,300, potentially even deeper correction. But on the flip side, if the situation in Gaza intensifies, price could actually maintain a position above 2,400, and we could actually see a rally up towards 2,450. So this one here is a little bit on the neutral side of things for gold right now. So just be mindful that this is going to be impacted by any run to safe havens at this point in time. But looking at it from a technical perspective, does seem that this is looking very, very overbought at this point in time. All right, lastly, we have oil. Now, oil is actually very interesting because last week it caused a lot of volatility last week. Initially, we saw a drop in oil prices because of the reserve that the US have, which is at about 2.7 million barrels, which is double than what market consensus is. But there were actually a retaliation from Israel to Iran. It wasn't severe, and there's no after effects to what it's done, right? So during that day, we actually saw a very strong rally to the upside. In fact, we saw a $3 up on oil prices, which is last week, and then on Thursday, and we saw oil prices pick up a little bit, but immediately on that day, because there was no direct retaliation coming out from back from Iran, it kind of just simmers down, right? So everything is just simmering down, and we saw price kind of retreat back lower to about 82, 81.50 at this point in time. Now, what's interesting here is that the range at 81.50 here is actually between $80 and $83. That's the orange box that you see. The $80, $83 is obviously the key range that was previously a support, has been a resistance. And right now, if we take a look at the movement here, we break 83 and market is just pulling back to test this level. So regardless of the situation in the Middle East, from a technical perspective, we take a look at oil prices. This is technically still in an uptrend, and we're looking at a little bit of a short-term retracement to test this previous resistance as support. And if price is able to maintain a position above $80 for the next 2 weeks, we're likely going to see a lot more buyers coming in at around $80, right? So if we maintain that position above $80. However, if we drop lower below 80, and the cutoff here is at about 78, so if price drops down below $78, then we might actually see that the run-up for oil has failed. We might actually see oil drop down even further. But for now, it's kind of that level testing period. It's still testing whether or not this could actually be a support area, and whether or not demands would actually come in is still to be seen. But again, even if the situation kind of simmered down a little bit in the Middle East, the risk is still there, because if anything happens, if things flares up again, it could really send a knee-jerk reaction to the upside for oil. So I think market is kind of like okay, we're not really going to take this up at this point in time because nothing has happened pretty much in the Middle East. Everything kind of simmers down. But at the same time, the risk there for things to go bad and for oil prices to jump up, it's still going to be there. So I think market is kind of like doing more of a cautious approach towards oil. But the current conditioning from a technical perspective is that this is technically still an uptrend. We are right now considering the return towards 80 and 83 as more of a level testing rather than a reversal at this point in time for oil. So with that, good luck with your trades, and I'll see you soon.